Good morning everyone and welcome to our free YouTube video 8 a.m. from Monday to Friday. Every single day I have a video for you at my free YouTube channel. So please make sure to subscribe to the channel, turn notifications on. 8 a.m. from Monday to Friday, trying to give my best to help everyone the best possible, especially on these turbulent markets, and trying to build the trading plan and the strategy, at least the sentiment on the overall picture. So if you're following the trading in the morning, the free YouTube channel, on Tuesday, on Tuesday, 8 a.m. every single day, I have a video. This was the yesterday video. This was on Tuesday video, Bears take over stock market. So this was on Tuesday, 8 a.m. before the market open, giving plenty of time of preparation. So right now I'm making an update and trying to give following this video here. If you miss it, please review it once again, and I'm going to make an update on the follow through from that video. So on that video, one of the things that I highlighted, it was one of the market spread indicators that I use, the McLaren Summation Index, that was giving a bear signal, on Tuesday. Why? On Monday, before the market opened, I was not able to, and no one can really anticipate and predict the future, no one. And you cannot predict how the big players and how the big money will handle, if they will press the buy or the sell button on the day. On Monday, before the market opened, I was looking for this chart to make something like this, a bull cross, something similar to what happened this. But it didn't happen. So we switched gears, and on Tuesday, 8 a.m. before the market opened, I told you that what I was expecting didn't happen, and it faded. And by fading, I was expecting, and that was a yellow flag for a possible pullback going forward. So we had that pullback, and we are having that pullback. And does that confirm the bear case scenario? On the short term, yes, but right now, and this indicator is still above the zero line. See where it stopped the correction from September? It stopped right at the zero line and reversed back up. So the zero line separates bulls from bears. See what happened after we crossing below the zero line on March? Yes, bad things happen. But once we stay above, we can reverse back up and resume the bull case scenario. So we need to be open-minded for what can happen next. If you look into the futures are bouncing and are green this morning. And it's somehow, it was expectable. Looking for the McLaren oscillator, it was something expected because yesterday the McLaren started hitting oversold readings. That's one of the oscillators that I use for oversold conditions. It starts triggering oversold conditions. So it was expectable to have at least an oversold bounce. The big question right now is this an oversold bounce, a dead cat bounce, or is this the bottom? Really, no one can answer that question. Why? Because we are going to some big events. So let's see here the charts. Let me see here the charts. We are going to big events tonight. Apple, Amazon, Facebook, Google, every single name, it's going to report earnings. How the market will react to earnings, no one can really know. What I can tell you, the Apple chart, for example, is very, very bearish. But can that confirm that we are? Let me put here the chart for you. For example, looking for Apple. Looking for Apple. The chart is very bearish. It closed below 112. It's below the 8 and 21 day moving average. So, and 50-day moving average. So yes, the chart is very, very bearish. But no one can really anticipate how the stock will react to earnings. What will they say on the conference call? And if they will give an outlook that it will trigger a move all the way above $120. No one can really anticipate that. Technically speaking, the chart is bearish. Okay, it's below the 8, it's below 21, and it's below the 50-day. Also below 112, it was my support. Looking below that can go all the way into 106, 103, next big level, and has a gap to fill all the way into 96. But if they say something and the stock goes above $120, watch out. Big short squeeze, in my opinion, with bears running to the hills and start covering the positions. So that's why I don't gamble on earnings, okay? One thing is for sure, looking for the past and looking for Netflix, for example. Netflix gone down last week after earnings. Microsoft gone down after earnings and staying below the 8 and 21 and 50-day moving average. So overall, FANG, it's bearish, but on binary events, anything can happen. So manage your risk wisely and be careful. And I don't hold any positions on earnings. So I prefer to wait after earnings. And also we are going to US elections. Next week, US elections, no one can really anticipate who we will win and how the market will handle and will react to the to US elections. So let's wait. In my opinion, cash is a position overnight, but during the day I try to generate cash flow. Yesterday I was able to generate some cash flow. I was with puts on Netflix and I was seeing that seeing some bullish options activity reverse very fast to the calls. It was in a matter of minutes. The stock skyrocketed. I locked my profits on the calls, got back into the cash, also closed the puts, closed the calls, and I was able to generate cash flow there, and the stock closed basically flat. So it goes volatile, it's very high, and it's very, very risky to hold a position, okay? Hold positions, especially on options, is very, very tricky game. So looking for the Dow Jones. Dow Jones start the week going below the middle of the range, and I was looking for first support, the lower support of the Bollinger Band, and the next support 26.5, okay, 26.5, and below that 26,200. So we break below the Bollinger Band support, and where we stopped, right at 26,500. That's the support here, the last low from the September correction. So now what? If it goes below 26,500, we have 26,200. That's my last line in the sand and my last support for the bull case. If we break below 26k, bad things will happen, in my opinion, okay? It can get very, very ugly. We have lots of gaps to fill. Okay, lots of gaps to fill down, so it can get very ugly. But if we are able here to hold, we have a gap to fill higher, so we can reverse back up and make a double bottom, for example, from 26.5k, a double bottom and reverse back up, and be some more time here cooking before it trigger the next move. In my opinion, what will trigger the next move will be US elections. So I don't like to gamble, so I'm not flipping coins, trying to anticipate what else is going to happen next. Here the Dow Jones confirming the double bottom, lower highs, and cracking below the 821, stopping right at the 50 weekly moving average. 26.5k, it's the line in the sand. Breaks below, watch out. 24,500 is the next weekly support, so it can get very, very ugly. NASDAQ, exactly the same thing, going from the middle of the range, going for the lower support of the Bollinger Band and stopping exactly there. Below that, if it goes below yesterday lows, 11,100. If it goes below, it has 10,677 September lows, and from there we see if it's able to make a double bottom or if it go back into the 10k. But that it will depend how the market will react to Apple, Amazon, Facebook. Tonight earnings, it will be the key, in my opinion, that will trigger the next trade. Looking for the weekly chart. The weekly chart very, very bearish, okay? You have here lower highs, breaking below the first weekly moving average. We have the relative strength fading, as I've told you on Tuesday, and the next support, less logical support on the NASDAQ on the weekly is around 10,900. Below that we have the September lows 10,600, and we will evaluate from there. But if we break September lows, watch out, can go all the way into 99.47. So the charts are very, very broken, very bearish. Looking for the SP 500, exactly the same thing. This week gone below the middle of the range. I was looking for first support, the lower support of the Bollinger Band, gone below. The next big level is around the September lows, 3209. That's the next big level. But the 200-day moving average all the way into 3129. So the 200-day moving average very, very down and lower before the current levels. So not catching the knife here, playing very, very careful. Looking for the weekly chart on the SP 500 is exactly the same thing. This week gone below the 8 weekly moving average, below that 21, and stopped around 32.68. If it goes below 32.68, we have the September lows 32.09 and 31.64. The weekly chart, it's making the relative strength, is making lower highs, but it's still holding the 50 areas. So anything can happen right now. I believe that the easy part of the trade already gone. Sadly, most of the gains were overnight for the shorts, and it was very tricky yesterday unless you got exactly at the open and were able to hold the volatility here. Volatility very high made things very, very tricky intraday. So that's why I get in, get out in a matter of minutes, because the trend, the trade reversed very, very fast. So overnight, protect your cash, in my opinion. During the day, yes, jump into some calls or puts, play up, play down. You have VXX, you have SQQ. Some of the names you have SDS, you have TZA, some of the names for volatility to pop. If volatility fades, you can short those. If volatility remains elevated and skyrocket, you can play longer with those as an edge. You have puts on the SPY, on the cubes, you have calls, you have plenty of tools to try to generate cash flow intraday. But if you have an edge, if you have your analysis say that intraday you are able to scalp it, but it scalps, okay? Right now, holding long term, nothing, in my opinion. It's cash. Prefer to wait for US elections, prefer to wait how the market will react on the tech names reports tonight, how next week we'll handle the US elections results, and from there we will evaluate going forward. Yes, right now we have yellow flags, we have bear flags here, but that does not mean that we cannot reverse up and going higher in November. So staying open-minded is the game right now. So if you like these videos, please give me a like on the video. Please subscribe to the channel. I would appreciate a lot if you do that. Subscribe to the channel, and so you can follow the tomorrow video 8 a.m. From Monday to Friday, trying to help everyone the best I can. And hopefully tomorrow we will have a more clear view after the tech names reports. Okay, so wish you all good trading. Stay safe and be happy trading. Thanks everyone. Bye bye. See you.